Hello guys, this is fairbinaryoptions.com, and we are looking at the US dollar Japanese yen now, but we are looking at the pair in the light of the non-farm payrolls to come this Friday after the ADP report we had today. You know, the ADP being the private payrolls in the United States. It doesn't necessarily mean that the outcome that we had for the ADP is going to come on Friday as well, but this currency pair looks to be both from technical reasons and fundamental reasons a bit oversold. Why a bit oversold? Well, like the name of this recording or analysis suggests, it is a corrective wave from the upside, and we are looking at a contracting triangle, and this to be a C wave of a triangle. Now this C wave is of a bigger degree, and I would say that based on Elliott waves, this would be a B wave of a bigger degree. Let's say a B wave out of this degree here, and it should go something like this. Let's make it blue. And then of course the move to the downside, I would say that this is an A wave, wave A. Now this wave A here goes of a lower degree. Let's make it of a different color. Let's make it black and 14. Now this wave A here goes with a three-way structure, A, B, C. Now this three-way structure, make no mistake, is a flat, and not only that is a flat, it is an elongated flat. This one is being called, and it is of a lower degree. The reason for that is that the move that follows to the upside by the time wave A is completed here, so the move that follows to the upside is only a B wave, and this B wave here should not be, let's say, mistaken by or with an X wave, because it retraces more than 61.8. If you take a Fibonacci retracement from these highs to these lows, you are seeing that it is retracing more than 61.8, and because of that, it means that it is not an X wave or an intervening X wave, because those ones are going below 61.8, but it's just a B wave. But being a B wave, it means that you have a three-way structure here, three-way structure here, and then a five-way structure to the downside. The question now comes from, let's say, from the fact that do we have a five-way structure to the downside here? It might be that this is A and a B and then a C wave here. Why not to have something like 1, 2, 3, 4, 5? What I'm trying to say is that we are not having A, B, C, X, but we are having an A and a B and then a C wave to come here to the downside. And from this moment on, we're looking for higher values to come. Whenever you're looking for higher values to come, then of course you want to buy call options like we want to buy here, call options. What we're looking for? Well, we're looking for end of week expiration date, so I would like to see them after the non-farm payrolls in the United States to expire, and I'm talking about an X wave to come, but like mentioned earlier, the X wave of this degree should not go more than 61.8. Actually, like the text says there with this analysis, I'm talking about 50%, 61.8% retracement. Normally this would be an area for the X wave, but ideally it will be only 38.2 and 50% based on the previous move. Now this wave too needs to be corrected. Judging by the, let's say, the structure that price made here, it might turn out to be an elongated flat of a lower degree, so something like A, B, and then the C wave. But in this area, 102.60, 103, I would like to buy some put options, as lower values are to be expected from that moment of time. It remains to be seen if our analysis is correct, but again, what we are seeing here, we are seeing an A and a B and then a five-way structure to the downside. It might be that the B wave ends here. It doesn't really matter. It doesn't change anything. It is all about the retracement level here. And this retracement level is more, but again, more than 61.8, making it not being compatible with the X wave retracement level. So there you go. What we have here, an ABC. Now we need an X wave, an intervening X wave before another move to the downside. This turns out to be, if it is like this, it turns out to be another elongated flat. We are kind of, let's say, not being held by the time element for this elongated flat, as the C wave needs to go almost double than the time taken for wave A and wave B. But I've seen this in the past, and I would say that it is not out of the question. Therefore, let's write on the screen here our analysis here, or our outcome or conclusion. Well, we're looking to buy call options with end of week expiration date. And this end of week expiration date actually comes this Friday. By the time the New York is going to close, that would be around, not around, that would be 21 GMT. And of course, it will be after the non-farm payroll. So expect volatility, expect unpredictable to happen, but we're forecasting higher values. Therefore, buying call options. Thank you very much for being here. This is fairbinaryoptions.com, and all these analyses are possible due to the help of our sponsor here, Line.